Hello family, it's Rambo K.E again. So today's on Friday, right? Actually today's on Thursday fell late in the night, but this video probably you will see it tomorrow on Friday. All right, so I did this analysis yesterday, right? And from last week, we said that we want to see the dollar index, that's the DXY weakening, and we saw the reason why it was probably going to weaken. All right, and we said the weakening of the dollar, of the strengthening of the dollar, it will affect the currencies that we normally trade. That's the Euro USD, GBP USD, XAU USD, USD CHF, USD. All these major currencies are going to be affected by the fact that the dollar is going to weaken or is going to strengthen. All right, but remember, from this point, when the price was at this level on the daily time frame, when we saw it having this struggle, this consolidation or ranging accumulation, whatever you want to call it, we say that we want to see how price will close below this level, right? We have marked my change of character. We said until price closes below this point, we are not going to consider DXY bearish, we are only going to consider it bullish. And we say that once it has closed below with a momentum like this momentum that we can see here, right? This on the daily time frame. We say that if it can close below with this momentum, with heavy momentum, with a heavy bearish candle, with energy, that tells us that that candle is facilitated, or it's created by the energy of sellers trying to push price lower. And we say the possible reason why they are going to push this price lower is to come to this our weekly and mitigate the demand zone. All right, you remember that all this was we looked at this, all this we looked at it from Monday all through the week, right? Today is on Thursday, and you'll see this video on Friday, tomorrow, very early in the morning, London session. Alright, we say that if price will close below our daily area of interest, that will mean our invalidation point was ticked, and we want to see price come to our weekly and mitigated demand. So, and then from this point, we will see price now continuing with its original bullish movement up to take this possible break or structure. Alright, but price does not move in a straight line. Alright, price seeks and delivers liquidity, moves from balance to imbalance, moves from balance to balance, and then from imbalance to balance. Understand what I'm saying? It moves from a level of efficiency to inefficient action, and from the inefficient to efficient price action. Alright, price does not move and leave a balanced price action behind. Alright, so it will come up to this weekly demand zone, and then from this weekly demand zone, we wanna see how the dollar is going to gain strength, and it will continue with its bullish movement. Alright, so that's the overview, that's the logic, that's the story behind the dollar weakening as we saw the other day. Right, so yesterday, yes, the video that I uploaded today, I said that I wanted to see price come lower, and then we're gonna see it buying. Alright, and that was what's happened today. Alright, you can see it. It traded below and it has tapped to our, let me move this a little bit so that this can be visible. Price has tapped our bullish mitigation block. Right, we can see this is a mitigation block. Price came, went below, it didn't take the previous low, and instead it pushed above. Alright, so this is a mitigation block. Price has tapped. Let me move this thing so that everything is clear. I don't confuse anybody, anyone. Right? So price has tapped our mitigation block, and we can see how the momentum is coming in. The bullish momentum is coming in. saying that we are going to have that kind of balance or that retracement. All right, we say that price moves from the level of balance to imbalance. We can see this how this huge candle closed. This is a liquidity void or an imbalance in price action. It's just a bunch of only sellers. We don't have a balanced price action. So what are we going to expect from price? We want to see how price is going to balance this imbalance. All right, and then it will continue bearish or it will continue bullish, whichever direction it wants to take. All right, but ideally, not ideally, but technically, we want to see how this price is it will balance this imbalance, and then will come lower to tap this our weekly and mitigate the demand zone. And then from here now we will take our original direction up to the uptrend or bullish run. All right, all this should not confuse you and tell you now we are bearish. No, this is a retracement. This is a bullback to facilitate that continuation move to the upside. All right, so we can see that price has stopped now. At the moment, our current bias is that we want to see price do some balancing, some retracement or some bullback. All right, and now it's start going to happen, and that's the move that I want us to also join or to engage. All right, price has tapped our mitigation block as we have seen, and it has done something very significant that I also talked about a few days ago. It has created a candle range theory. Right, it's creating the candle range theory is not fully mature, but by tomorrow it will be mature. Right, we have like 4 hours for the daily candle to close and the new candle will open. All right, we can see this kind of movement, and this candle is going to close inside the range. So we have this our black candle creating the range. That's our candle range low and our candle range high around that point. So what do we want to do? And this current candle, you can see it is closing with an opposing strength from the market. The candle range was created by the sellers, but now the one that is closing inside is closing as a bullish candle. That tells us that the buyers are into the market. They are ready to retrace back to fill this imbalance that was created to the downside. All right, so what I'm anticipating for price to do, and having today being a Thursday, all right, so price does not move in a straight line. All right, price actually moves from Monday, a kind of accumulation distribution, all right, and balancing that distribution. You see, accumulation, manipulation, and distribution. So majorly from Mondays and some part of Tuesday are majorly for accumulation. Tuesday during New York, Wednesday, and some part of Thursday is for not manipulation but distribution, and then we have some part of Thursday and some part of Friday as that balancing. All right, so we have accumulation, manipulation, and distribution. This thing ICD explain, not ICD but ICT explains it better. I think he calls it something like GIF, something like that, in a way that the move that was created from the week start, we want to see price try to balance it or to move against it so that price can be at a level, can be balanced as the week comes to end. So this move that was created down, the price balance it as the week close inside. Let me sketch that thing here, right? Let me sketch what I'm trying to say. So from Monday, price will do something like this. All right, and Tuesday it will do something like this. Tuesday or Wednesday, it manipulate. All right, and then from there it will distribute. Right, you get my point? That's Wednesday, Thursday, and then on Friday or Thursday, New York as now today is on Thursday, and we can see how that candle is trying to go inside the range that was created the entire week. All right, so on Thursday, New York, almost New York close, and Friday, we want to see how price will come in, and now the week will end around these areas. Right, so typically this is how the week goes. All right, this is how the weekly candle opens. It opens at this point, accumulation a little bit, manipulation, it distributes, and then it comes inside to close. Alright, so this is typically what's happening. Also at this point, kind of accumulation, manipulation, this black candle, distribution, and now price coming to close inside the range. Alright, so how can we trace this movement? We have said that this black candle was created as our candle range, and today's candle has done well to clear the low, and that it is closing inside as a bullish candle, telling us that yes, the buyers are coming to the market, so we are looking to take our candle range high. Alright, so where can we engage the movement? Now the movement is going to come either from the 1 hour time frame. So this is our candle range high. Let me rename it instead of inducement, although just this the same thing. Alright, candle range high, and this is our candle range low. Candle range low, right? Candle range low, and that guy is our candle range high. Alright, so this is the move that I wanna see start tomorrow, and it will end somewhere Tuesday next week. Right, this move will end somewhere Tuesday next week, so that we can continue that movement up to this level before we continue to the upside. Right, so what we wanna see is us to capture this movement. Right, what I want us is to capture this movement up to that guy candle range high, and then from there we'll monitor price what it will do before we do anything else. And now from this flip supply zone, we will see if price will give us confirmation to continue for bearish or sales. We will do that, and if it closes above this flip supply zone, we will say that now we have changed the ultimate direction, and now we are going bullish uptrend. Alright, so our entry is going to come from the 1 hour time frame. Alright, and it's not yet ready. This was a breakout structure. Right, let me not remove that candle range low to avoid confusion. So this was a breakout structure to the downside. Alright, breakout structure. So typically what we want to see is this high to fail and these candles to close above, so that we can say we have a change of character. Alright, this is the point. If price can close above there with momentum, not with this kind of wicks, with momentum, then we have change of character, and then we will see price, this is what I'm saying, price to close, and then we'll see it come back to take us in, and then we'll continue with that buy. Alright, then we'll continue with that buy. So that's it from the DXY. I'm anticipating to see the DXY being strong for the rest of the week. Alright, so this also will affect the EURUSD. Alright, just the same thing but in opposite direction. Let's just see it. You can see it. Alright, price took this liquidity. Initially price is going to come to this supply zone. It is. Alright, but the price does not move in a straight line. As we have said, it just moves, comes back to balance, and then it will move up to that supply zone before we continue with the ultimate bearish movement. Alright, so this is the reason why this candle range also is forming out from the EURUSD. Alright, you can see just the same price action. Price took this liquidity. Alright, liquidity was taken. And let me put it so well. Liquidity was taken, and we can see how buyers are coming in to the market, and they are closing below, also creating that candle range theory that we have seen from the DXY. Alright, there. So this is our inducement, our candle range low. This is our candle range low, our TP in short. This is where we want to get out of the market from. Alright, let me show you why I was calling that as an inducement. Let's go to a 4 hour time frame. I'm calling it, I was naming it initially as inducement because price created this breakout structure. Alright, So some people are going to take this a valid breakout structure and they will start buying from this level. Alright, this is the origin where the move that started from, and they will be buying from this point, forgetting that we have untapped demand zone below here. Alright, and this retracement was not a valid retracement. Why? It didn't come to 50% of the Fibonacci retracement. You can see it. It was not a mature retracement. Alright, so this is a possible inducement. Alright, and also we have our candle range below it. So that makes it a possible inducement. Alright, but let's just maintain with our candle range low, not high. Right, this candle range low, and this is candle range high. Candle range high. So tomorrow what we want to see is just that market give us 1 hour market structure shift with a fair value gap, and then we will take our trade bearish. We'll take our trade. But you can see that we don't have a market structure shift yet. So if tomorrow price opens and it gives us something like this, we will take it to the downside, right? This being a market structure shift to a fair value gap or another block, and then we'll take our sell to our candle range low. Alright, we have said that this is a trade it's going to run maybe up to Tuesday next week, so you can swing it if you have the capability, or you can just inter-trade it and get out of the market with a 1 to 3 or whatever risk to reward ratio that's cool with you. Alright, so I want to look at USD at my last thing. It's having a same price action just like the DXY. You see? Alright, just see what's happening. I saw these moves, alright, these moves, I knew these guys are liars. These are all traps. Price gonna come to this point at last, and it has tapped it, and it has also created our candle range low, not our candle range low, but our candle range theory. This candle has taken our candle range low, so this will be our target, our candle range high. Alright, candle range high right there. So that's the trade I will also be monitoring on USD/CHF. Right, price tapped to a bullish breakout structure, not breakout structure but order block, and this was an internal breakout structure that led to this swing high, and all this is a retracement. So price has tapped our continuation